Injective is trading around $4.99 today, down massively from its all-time highs. So the big question is simple. Is Injective a forgotten layer one? Or could it just be one of the most undervalued infrastructure plays heading into 2026? Because beneath the price action, Injective is still quietly building one of the most advanced DeFi first blockchains in crypto. So today we're going to be breaking down what Injective actually does, why it collapsed, the biggest catalysts ahead, and we're going to pull out some realistic bear, base, and bull case price targets for 2026. So let's get into it. All right, guys, welcome back to the channel. Thank you for watching. If you want to jump straight to the price predictions, go ahead, click down in the description. I linked it right to the price targets area. And also, please, if you find value in this video, hit like, hit subscribe. We'd really appreciate it. Let's jump in. First of all, we're going to be talking what is Injective. Again, guys, on this channel, we don't throw money away. We don't buy anything unless we fully understand what it does and why the price could go up. This pump and dump hype bullcrap just leads us to a sick feeling in our stomach when we watch our bags go to zero. So right now, if you don't know what Injective does, if you just saw a couple shorts on YouTube and you're like, oh, buy this, it's going up. Don't. Listen up. I'm going to tell you what it does. And then you need to think inside. Do I believe it? Do I believe in this chain? Do I believe that's where the future is going? If you do, buy some. So here we go. What is Injective? Injective is a layer one blockchain built specifically for finance. Not meme coins, not NFTs, not gaming hype. Injective is optimized for decentralized exchanges, derivatives, on-chain order books, real-world assets, and tokenized finance. Injective is built on the Cosmos SDK. It uses a consensus model. It is fully interoperable via IBC. Almost zero gas fees. Guys, and that one is important. If we're talking finance and high-frequency trading, near zero gas fees are super important, and I think that is a hidden key of the Injective framework. So when you're talking about Injective, and I'm going off on a tangent here, Injective really wants to get into that market of tokenizing the stock market. And you can imagine high frequency traders, Robinhood, E-Trade, all these brokerages that offer zero commissions on trading. It's because they arbitrage through high frequency trading. And if we're going to move on chain, we need near zero gas fees to keep that up. All right, back to it. Near zero gas fees, sub-second finality. Injective also allows developers to build spot exchanges, perpetual futures, options protocols, synthetic assets. And guys, all this is fully on chain without relying on centralized matching engines. And this is why Injective was once considered a DeFi powerhouse. But if you've been following crypto for any amount of time, you know that Injective had a massive crash. It didn't drift lower. I mean, it got absolutely wrecked. Pulled over destroyed. It was ugly. But here's why. Injective had overexposure to DeFi leverage cycles. Liquidity migrated to newer narratives. Heavy competition from Solana. Risk-off environments that crushed Alt L1 valuations. Right? Everything got crushed. Injective took it on the chin worse though. I mean, it didn't fail fundamentally. It got out-marketed and out-hyped. And in crypto, guys, especially in this very beginning stages, narratives matter. They matter, right? Because right now there are some real world use cases coming out. But don't get me wrong. It is all about where we're going. What is the narrative? What does the future look like? Does this coin or this network solve a problem? Will institutions use it? The narratives matter. But the key takeaway, and this is a takeaway with a lot of these chains, is for Injective, the technology never broke, right? And there was no massive downtime. There was nothing that spooked investors or that was wrong. The chain also never stopped, and development never stopped and never slowed. And that is where opportunity starts. So let's talk about some catalysts, because I'm a big stock guy. I'm a big stock and option trader. I'm also into crypto, but stock and options is my main go-to. So Injective it's really intriguing to me. So the catalyst for 2026, DeFi 2.0 and on-chain derivatives. As regulations tighten on centralized exchanges, on-chain perps and dexes are going to matter more. And Injective is purpose built for this. It's not a byproduct. They built it on purpose to solve that problem. If DeFi volume rotates back on-chain, Injective will directly benefit. It accrues value through fees and staking. Okay? Number 2, real-world assets and institutional DeFi. Again, if you haven't seen the video with Larry Fink and BlackRock, right, from BlackRock, talking about tokenizing everything, I have a video on my channel on that. Just go to my channel, look up Larry Fink BlackRock, and you'll find it. They want to tokenize everything. And Injective has been positioning itself for exactly that. Tokenized assets, institutional grade DeFi rails, compliant financial products. And as TradFi experiments with on-chain markets, Injective fits that narrative way better than any meme chains. Number 3, Injective has great interoperability with Cosmos. Injective is not isolated. It connects natively to Cosmos. It connects to Ethereum via bridges. It has cross-chain liquidity through IBC. So if Cosmos can regain relevance, Injective is one of the highest quality chains in that ecosystem. Okay, catalyst number 4. We gotta always talk about our tokenomics and supply dynamics. And this is very important that Injective has a capped supply. That is one thing I look at when I'm looking at coins and price targets and what I'm going to put my money into. I need a capped supply, or a supply that doesn't go up infinitely, or is deflationary, kind of like Ethereum. But Injective has a capped supply. It also has burn mechanics tied to protocol usage. And what does that mean? That means anytime a transaction occurs, a small tiny amount of Injective gets burned. That means done, out of here, cannot be used again. So the supply shrinks ever so slightly, but it shrinks as usage goes up, right? Which means it's deflationary. Which means if I held 100 tokens and there used to be 1,000, now there's 999. So I own a larger percentage. Okay, so that is burn mechanics, and the cap supply are huge if you're looking for price appreciation. Injective also has strong staking incentives. So if activity returns, supply pressure could drop fast. So let's get into the price predictions for 2026. I have them up on the screen. Bear case, we're talking $3 to $6. And here's the assumptions that would go along with that target. DeFi would stay muted. Perps would stay centralized. Injective would just kind of remain niche. So this is basically range-bound survival mode for the chain. At $4.99 today, this means limited upside, but also limited downside unless the chain totally stagnates or we have like a broad scale crypto meltdown, right? The base case for Injective, I'm saying $12 to $20. So here are the assumptions for this price to play out. DeFi volumes would need to recover. On-chain perps would regain traction. Injective would capture a slice of institutional DeFi. And guys, this would be a 2 to 4x from current prices. It's not crazy. It's not to the moon, but it would just be a solid return to relevance. And the bull case, 35 to 60 bucks. I mean, probably not, but if certain things take place, we could maybe see it. Number one, and above all, for all of crypto, we need the Clarity Act to pass in early 2026. And not only does it have to pass, it needs to be favorable regulation for crypto. That is the linchpin to everything. I think it's going to be favorable just because of Trump's commentary, Trump's exposure to crypto, his kids' exposure to crypto, him wanting to build Bitcoin treasuries, to be the crypto capital of the world. I can't imagine a world where Trump is saying all these things and then the regulation out of Washington is bad for crypto. So I think it's going to pass. I think it's going to be early 26, and I think it's going to be positive. So the other assumption for the bull case, we need to see major on-chain derivatives adoption. Real-world assets and tokenized finance would need to accelerate. Injective would become a top-tier DeFi execution layer. And a lot of people, you guys are probably like, well, how do we know if this happens? You need to read the news. Okay? You need to stay up on it. You need to look for press releases. Subscribe to channels like this, right? I'm scouring the news every day, bringing you what I find and trying to put it into context on if it's positive or negative for the networks that we cover. So if this happens, it would still put Injective well below the prior euphoric valuations, but it would reflect real usage and demand. Because guys, the days of the hopium and the meme coins, it's over. Okay? Crypto now is all about utility, adoption, and adoption by institutions and enterprises, solving real-world problems at scale. If you can't do that, the price is going nowhere. So not only does it need to solve a problem, it needs to be implemented with major partners. So we have to be watching the news. And this is where Injective would remind the market why I existed in the first place, right? If we can get some real usage and real demand. So 35 to 60 bucks, yay. There's also some things that could prevent that from happening. So what would those be, right? Again, no price prediction is complete without listing off the risks. And I want to be completely transparent on this channel. Injective has heavy competition from Solana-based perps. It does. DeFi regulation is still uncertain. We don't know what the Clarity Act is going to be. Liquidity fragmentation across chains. Narrative risk. We talked about that in the beginning. Crypto ignores good tech all the time if the story sucks. So Injective needs to get the narrative right. They need to show how freaking awesome they are, because they are. Their tech is amazing. Their tech is built for tokenizing the stock market. But if no one knows it and the narrative is not there and the partnerships are not there, it doesn't matter how good the tech is, right? They don't get any partners. Injective, it doesn't win by hype. It wins by execution. So they need to execute. So here's the final take. And again, guys, this is not financial advice. This is just for education and entertainment. Injective at $4.99 is either a value trap or a deeply discounted financial infrastructure bet. And that's what I personally look at. That is where I focus, is infrastructure. What chains are going to make up the base level infrastructure, the picks and shovels of the financial revolution? If DeFi, on-chain derivatives, and tokenized finance matter in the next cycle, Injective is still very much in the conversation. So the question really isn't, can Injective pump? Right? We don't worry about pump and dump. That's not what we're about. It's, does the market actually care about real financial blockchains again? So comment below. Are you bullish on Injective into 2026? Or is this a chain the market already moved on from? And guys, if this helped, hit like, subscribe, and I'll see you in the next one. But before we go, remember, this is the world of crypto. It's highly volatile. It moves fast, which is why we need to stay focused and lock in, because the world is about to be tokenized.